Hey guys, it's Christmas in July. Well, for us agents it is. We just got a whole fresh batch of market statistics. Ours, of course, come from Hussey Appraisal Group Hawaii, who I used to work with. Now, when these kind of numbers get released, it's really common for agents to get what I like to refer to as data diarrhea, where basically they start to just spit out all these numbers and read them off, in their detailed market report that they'll send to you, percent, market, without really explaining what any of it means. Well, what we'd like to do here is break down some of the larger trends. Right now, Hilo's losing steam the last couple of quarters, but Aina Loa's gaining steam. Volcano is starting to kind of boil, while Kona is frankly exploded. Now, why are these things happening? That's what we want to go into next, so I hope you'll stick around. Now, let's take a look at East Hawaii on the Big Island. Now, some funny stuff going on here. Hilo as a market itself is still really lagging at the moment. It's got the lowest back-to-back volume of sales since like 2014, in over 10 years. Just 60 houses sold per quarter for the last 2 quarters. And, prices are still off from about 10% from their highs, back in end of 2021. Aina Loa, on the other hand, which had been absolutely suffering the last few quarters, actually saw volume of sales rocket up from 24 to 37 units sold quarter over quarter, and prices recovering up to about $335,000 from like a 20% drop earlier. So what could be going on there? Well, simply buyers are more sensitive on the east side of the Big Island to interest rate increases. So what are you going to do when that happens? Well, with homes an average of $500,000 in Hilo, you're going to go to a cheaper market, which in this case is Aina Loa, cheapest market in Lava Zone 3, just about on the Big Island. Well, while we're at it, we're on a roll here. Let's round out the East Hawaii market as best we can. Hawaiian Paradise Park, we've mentioned before, actually bounced back from its mid-2022 lows, and it's now averaging about $500,000 per single family home. And in fact, volume has jumped right back up from 51 units sold the last quarter to 74 sold this quarter. That's a huge percent jump increase. Now, why on earth could that be happening? Well, that market actually has a lot of people coming out of areas like California, huge percentage of them. And a lot of them are much less interest rate sensitive and are actually buying with cash. They want to have an acre, they want to be in a tropical climate, they want to be in an area that has pretty good infrastructure, which Hawaiian Paradise Park has. So that explains that for you. The one that's a mystery to us right now is Volcano, of all things. It's a harder market to analyze, but it's nearly eclipsed its previous record here, hitting about a $395,000 level, which is the second highest ever as far as quarterly stats. Last quarter, volume is still a little suppressed, moved up to 14 units from 9. But if anyone can answer that for us, we'd appreciate it. Well, let's round things out with the west side and also kind of the resort districts over on the Big Island, which are doing quite well. Waikoloa is doing great. It's averaging like about $1 million a house, as it was the previous few quarters. Now, volume is still a little bit suppressed, down about 47 units as opposed to the 93, back in like the middle of 2021. Now, what could that be caused by? Well, we got a lot of people that actually are retirees moving into Waikoloa Village, for example. And there's a high volume of units down in that market, and they don't tend to move on as quickly as, say, Kona would, which is the real standout explosion of a market on the Big Island, by the way, setting an all-time record high of about 1.25 million for a single family home, with the volume of sales rocketing up, hitting 103, which it had been down, suppressed almost to half of that a few quarters earlier. And what would account for a higher volume of sales in Kona, you say? Well, there's more second home owners in that market than there are in Waikoloa Village, for example. And so that generally tends to account for more liquidity within a real estate market itself.